Yo, what's up everybody? I am, of course, your favorite crypto enthusiast, LL here, and today we are going to be talking about two important things. Number one, the Ethereum triple halving. What is it and what is it going to be doing to my bags? And secondly, my Ethereum price prediction for next year. So let's get started without further ado. So first we have to explain and understand how does the supply of Ethereum work. So Ethereum doesn't have a max supply like, for example, Bitcoin has. So in the beginning, it was mining around 34,000 Ethereum per day, okay? And over the time, obviously, there has been a curve of deflation on the actual mined amount per day. And currently, we are sitting at 12.7 thousand Ethereum being mined through proof of work. Now, what will basically happen is going to be the Ethereum Merge, where proof of work is going to be stopped and we're going to be transitioning in to proof of stake rewards, okay? That is the first phase, I guess phase 0 of Ethereum 2.0. And economically, this is the most important change that is going to be happening. And I'm going to be explaining it here on the next website. So here we have, for example, a chart of last month, how many Ethereum was basically mined out, and it was around 400k. And out of that 400k of Ethereum that was mined, 380k were burned, okay? And this is what you need to understand, is that here you can see the current blocks, and every block there is around 2 Ethereum as reward. However, on every block, since the London hard fork, I did a good video about that, some of you have seen it, we are having Ethereum being burned out of the supply. This is not being distributed or anything. It is fundamentally being burned out of the blockchain. And in some of these blocks, we are burning more than we are mining. So that means that we are facing deflation or near deflation. And here, for example, we burned 1.4 Ethereum and we mined 2.0 Ethereum. And here's a better website called the Ultrasound Money, where is a good breakdown of the actual curve, so you can understand what is going on. So here is the Genesis, when we were mining 5 Ethereum per block, then 3 Ethereum per block. Constantinople, 2 Ethereum per block, and phase 0 where we started out staking. Right now around 5% is of all Ethereum, 8 million of Ethereum is being staked. And currently there is 118 million Ethereum in existence, and 8 million roughly out of those are in staking. And those kind of be moved back into the Ethereum number 1 layer. So they are on F2 as it is called. So those are, form of a supply that is locked and nobody is getting yield for it right now, or something that they can basically cash out. So that is a very fundamental thing you need to understand here first. The second thing is, once the merge happens, and that's going to be happening according to our current dates within Q1 of 2020. Now it can be delayed, or it maybe gets delivered earlier. So I guess between March, April is probably the current timeline. Hopefully it will come out at that point. But what you need to understand here is that when that happens, what we are mining, as we earlier discussed, currently we are getting 12.4 thousand Ethereum. But obviously there's already, here you can see on the bottom, 10,000 is being burned on daily. So only 2,000 got minted. But what will happen with this new update is that we will be going through the triple halving, which means instead of having 12,000 mining rewards per day, we are going to be having roughly 10 times less than that. So 10%, there's not like an exact rough estimate for that, because that is based on how much Ethereum is being staked. So we are talking about roughly 1,250 Ethereum being mined per day through proof of stake. Not proof of work, proof of stake. And that brings out two fundamental things. Number one, we are going to be burning almost 9,000 in the current trajectories, over 9,000 Ethereum per day, if the usage is going to be staying at the same numbers as it is today. That means we are going to be having a deflating asset now. According to the estimations, this is going to be minus 2% of total supply is being burned on a yearly basis on Ethereum. So no longer it will become an inflating asset, it will become a deflating asset. That is obviously based on the usage of the network. So if everybody is going to be bailing out on the network, less transactions, less burn, obviously. And that gets into our next chart, which we already talked about. So there's an increasing amount of people who are staking. So from last year's December, in 1 year, we have gone from 2 million or 500,000 to 8 million. 8 million and 300K is being staked as of right now. And that sum is going to be increasing because then people are going to be just getting interested into that, and that's going to be a lot more easier. And here's a bit of like the stake effectiveness curve here. And if you kind of like get in now, I guess you're going to be getting a bit more better staking rewards for a certain period of time. But make you look at this. This is the Bitcoin chart. So this is the 3 charts. So halving in 12, 16, and 20, okay? And the next is in 24. Now, what you need to understand here is these is a massive, this is the, from $12 into what we are right now, like 56K or something. So we are basically going through 3 cycles at once in terms of the Ethereum's supply. And here's a bit of a breakdown of the proof of work. So roughly, this is a bit outdated information. So as of writing, 13.5K is being annual daily issuance or annual issuance. This is daily chart, and this is the annual 4.3%. Now, when the proof of stake happens, the current projections are saying, according to this chart here, is that we're going to be having 0.3% to 0.4% issuance rate as we move into the merger. But there's one fundamental thing with this versus Bitcoin. Because Bitcoin is mined, that means that there is going to be an electricity investment, and those miners have to pay the electricity bills. So they always have to dump a form of their money. So there's a sell pressure for Bitcoin from the miners because they need to get paid. But because Ethereum will be transitioning into proof of stake, the cost of running a node is nowhere near into the electricity costs of Bitcoin, meaning the sell pressure will be dropping according to some estimates. I'm not saying that I believe in this, but some people are suggesting that sell pressure will be dropping to 80 to 90%, meaning we're not just having a triple halving, we are having deflation, and we are having a massive decrease in the selling pressure of Ethereum. Okay? So now we have kind of gone through everything that you basically need to know about the merge. So long story short, currently we are minting 12,000 Ethereum, 12,500 Ethereum per day. After the merger, we're going to be minting around 1,200 Ethereum per day, plus all the deflation that is happening. And we are deflating around 10,000 Ethereum per day. Currently, in this day, we have, burned more than has been minted, so it's been negative. If this would be the standard for day, this would mean that we would be losing 9,000 Ethereum per day. And that is going to be a significant amount. Then we're going to be having a bunch of money going to be locked in Ethereum staking, which means less supply in the market, which means more money demand because there's not enough liquidity to go around to buy Ethereum. So the price will go up. So this is basically my thesis, what will be basically happening. I mean, this is all hard math. This is not some bullshit TA, which is pseudoscience. This is absolutely massive. It's just about 2 things now. One is, will it actually ship within Q1? That is extremely important in my opinion. And there's no delays on it, hopefully. And if it does, it's going to be massive. Now, how long that price time will come into effect is another question. I think there's going to be a immediate change because mining will be shut down indefinitely, and there's going to be obviously maybe people rushing into staking. So a lot of miners are probably going to be transitioning into staking. Now, what is your price prediction? Now, if you look at these charts for, comparing this to the Bitcoin and everything, I think $20,000 is given minimum within 4 months from the merger. It could go even to 100K. It's definitely going to become a rank 1 currency. The tokenomics are too strong. So unless Ethereum will have massive hack or something, there's nothing that will stop the price going massively up for Ethereum. And right now I would argue that it's being suppressed in so many ways. But obviously, I'm not saying even as Ethereum is a great price investment, I don't think that Ethereum is going to be the chain that is going to be the all be all things. It's not going to be the de facto chain. I don't think it can scale even with the Ethereum 2.0. But a lot of people won't see that video or see this video telling me that. Or investors won't care about it or don't know about it. They blindly believe in Ethereum and it will go massively high. And I don't know if that's going to be during the bear market or the bull market. I don't really care. The fundamentals are so strong that it will be forced to go massively up, despite in what market we are. And that's pretty much my rundown of this video. I'm not going to be making this any longer. I want it to be short and concise in 11-12 minutes. And obviously, you can send your donations. If you're not bullish on Ethereum, send them all into this address. Send your cool tokens into this address, NFTs. Send all of them to here, and maybe the gods will bless you. Thanks for watching. I will be seeing you guys on the next video, whenever it may be.